Hi guys, welcome again to my channel. Forex Mentorship. It's nice to have you guys on this channel. The channel is growing and I'm really grateful for you guys for subscribing to my channel, and I've been receiving tons and tons of messages from you guys thanking me for the videos I create. I really appreciate you guys. Thank you, thank you, thank you. In this video, I'll be talking about aggressive entry and confirmation entry. What is aggressive entry? An aggressive entry is an entry you take in the market without waiting for a confirmation. Like, you just get into the trade without confirming if the trade is actually going to buy or is going to sell. Why the confirmation entry is basically waiting for confirmation. That's just the simple explanation. Waiting for a confirmation before you get into a trade. Okay, so today in this video I'll be using this Gbpusd as a case study for explaining the aggressive entry and the confirmation entry. Okay, so let's do a quick analysis on this pair. This is Gbpusd, and as you can see, we have break of structures to the downside. We can see that Gbpusd has been in a bearish structure at this point in time, and it took out this higher low right here, and it also took out the last low that we have at this point. Okay, so now since we broke below two significant lows, the market then pushed up. So since we are in a bearish structure, we'll definitely be looking for sells at this point, right? And as you can see, when this order block right here, this supply zone took out these two low, this and this, when it took out these two lows, this was left unmitigated. Okay, you can see it was not mitigated. Okay, so now since we've identified this supply zone right here, and this is on the 1 hour time frame, so now because we know this structure is bearish, we are looking for sells in the market, right? So taking off a sell, setting a limit right here and taking off a sell from this place is simply what we call aggressive entry. That is, you just decide that whenever price comes into this zone, into this order block right here, this supply zone, you just want to take your sell trade and take the price down. This is what we call aggressive entry. You are entering aggressively. Aggressive entry can be, it has its own cons, because if you are not careful, what if price comes into this zone and just go above this level? We've seen that happen several times on the chart. So it can stop you out of the trade and it's your stop loss, making you lose your money, your capital. So, and sometimes the pro of aggressive entry is that it allows you to not miss so many trades, because sometimes when you wait for confirmation entries, you tend to miss out on some trades. Okay, so at this point, if the market comes into this zone, you are instantly in the trade right here. Okay, you are instantly in the trade. Okay, so now, so for another con of aggressive entry is that aggressive entry leaves you with a huge stop loss. Okay, as you can see right there, taking this whole supply zone as your entry, we are having a stop loss of 32 pips, which to some people is quite okay by them. I will not tell you that a 32 pip stop loss is too much, because we all have different ways of trading and what you feel is convenient for you. The major thing is to always put your risk management in place. Okay, so but for me, as a trader, I don't normally want to go beyond 15 pips stop loss. Okay, sometimes I may do 16, but majorly I don't want to go beyond 15 pips stop loss. So if you feel you are convenient with using 30 pips stop loss, go for it. It's your choice, but there are ways to minimize, to reduce this stop loss. Okay, so you can have a better risk to reward. Okay, so and this is where the confirmation entry comes in. Okay, so now if you are to use a confirmation entry, you realize that you tend to use a lower stop loss, a smaller stop loss compared to when you get into your trade aggressively. Okay, so now let's move to confirmation entry. To get confirmation entry from this trade, all you need to do is identify your supply zone or your demand zone. In this scenario, we are having our supply zone identified. Once price comes into your supply zone, all you need to do is wait for a minor break of structure or break of structure on the lower time frame. Wait for a retracement, get into the sell, get into the trade, and you can then sell back down. Okay, so and for confirmation entries, you get your confirmation entries on the lower time frame, that is any time frame below from 15 minutes to like 1 minute to like the 30 seconds. Okay, so now let's go to like the 5 minutes time frame. Now, as you can see, we've tapped into this supply zone right here. All we need to do is wait for the market to give us a confirmation to go for a sell. Okay, so let's play. You just have to be patient while you are looking for confirmation entry. Okay, so right now the market is still doing its thing, and okay, as you can see, let me pause. You can see now we've created this high, and we had this low that gave us this high. Okay, so now we'll be expecting for this low to be taken out right here, but as you can see, after creating this high, we created this low right here. This low here has now pushed up here to breaking above this previous high right here. Okay, so now we have a new high. For us to find confirmation entry, we'll be looking for one of these lows to be taken out. Okay, so now let's continue playing. Okay, as you can see now, we now have this low right here, and we have a new high. This now becomes our new high. Okay, so we are still waiting for a break of structure. Yeah, so now as you can see, we now took out this low right here. This low is now being taken out right here. We have a break of structure, and not only that low was taken out, this low right here was also taken out. This low was also taken out. Okay, so now we've had this, we now have this break of structure. At this point now, I'll be waiting for price to come back into this area. From this area to this area, we've had this break of structure. I'll be looking for area where I can get into a sell trade. Okay, so at this point in time now, can move down to the 3 minutes time frame. Okay, 1 minute time frame. Okay, so as you can see now, moving down to the 1 minute time frame, I can see that the market left behind this zone right here, and we can also see imbalance at this level. Also, this zone was followed by huge impulsive down candles, these two impulsive candles, and we have imbalance at this level. So at this point in time, I'll be looking to take a sell from this zone. And mind you, like I always say, and our stop loss can be right here, which is now about 1.9 pips stop loss. Like I always say in my videos, don't try to say, oh, I want to have a 2 pip stop loss, a 3 pip stop loss. There's nothing bad in having a 2 or 3 pip stop loss, mind you, but sometimes you need to give your trade some room to breathe. Okay, you don't want to be stopped out unnecessarily on in winning trades. Okay, so at this point in time, since this stop loss is about 1.9 pips, I'll prefer to take my stop loss to this last high. This is the significant high that where the impulsive move came from. It was from this high that we had this move to the downside. Okay, so I want my stop loss to be at this level, because at this level I'm still using just 5.1 pips as stop loss. Okay, so this will be my stop loss zone, my entry at this point. Also for your entry, like I always say, give yourself room, because sometimes, let me take out this one, sometimes markets will not tap exactly, markets will not come back to mitigate exactly the level right here. Also give yourself some room below your entry point. So at this point, I'll just shift this one down a little bit, so I get tapped in. And sometimes because of your broker spread, you may not be tapped into a trade. That's why you need to give yourself room, both for your stop loss and for your entry as well. So at this point in time, we are having a total of 5.9 pips. That is about 6 pips stop loss. And for our take profits now, for the take profits, we can now go to a higher time frame, like the 1 hour time frame. Can go back to the 1 hour time frame and look for area where we can take profits. Let me take this back. Okay, so going to the 1 hour time frame now. This is our supply zone that we are trading off from, right? So for my take profits, I'll be targeting this imbalance right here on the 1 hour time frame. As you can see, we have imbalance right here. These are zones where you can target for take profits area. Okay, so let's go back to the 1 minute time frame now. Going back to the 1 minute time frame. So we are back at our 1 minute time frame now. So let's play. As you can see, okay, we got tapped in, you can see. So this is why I always say give yourself room. Okay, if we add our stop loss at this exact point now, we would have been taken out of this trade, but because we add it at this last high. And also, if you notice on this 1 minute time frame, we can see that we still have little imbalance around this area. Okay, so we got tapped in, but we are now in a drawdown. Let's continue playing. And just after that, the market came down. The market pushed down. Okay, I think we should move to another time frame so we can be fast. So now yes, so as you can see, we have yet another break of structure at this level right here. We have another break of structure, and normally when we have a break of structure like that, we always say we should try to move our stop loss to break even, But you can see if we had moved our stop loss to break even at this point, we would have been stopped out of this trade as well. So sometimes the market doesn't dance to our tune sometimes. So that's why whatever you do, try and give yourself breathing space and allow your trade to move, because sometimes we can have a particular zone being mitigated not just one time. We can have mitigation going on the first time and the second time, and sometimes even for the third time. Okay, so always make sure your trade is breaking significant structure before you break even. Okay, there's really no perfect there's no perfect strategy out there. We are only trying. Okay, so always allow your psychology to be in place. And as you can see from right here, from our entry right here to this place, this was just about 20 pips in profit before the market came back into this area. So if you still add your stop loss in place and you've not yet moved to entry, then you'll still be in the trade at this point. Okay, so but I will advise if the market breaks below this level at this point, you can definitely move your stop loss to break even at this point, because once we break this major low in the market, I think it's a good time to then break even. Okay, so let's keep playing. And yeah, we had the break of structure, this break of this major structure. So now we can have our stop loss at break even at this point. Also, we can see that at this point from entry, we have about 45 pips already. And if you want to take partials at this point, you can decide to take some profit off your trade and keep the rest running. And down we go. Okay, so this is how to look for confirmation entries in the market. Okay, so now using the confirmation entry from this point, we are able to get a risk to reward of about if our take profit is hit at this level from our 1 hour time frame. Yeah, from this imbalance field, if we get a price to get to this area, we'll be having a risk to reward a RR of about 21 RR, compared to when we have an aggressive entry from this zone right here with a stop loss of about 30 pips to this level. Okay, so at this point we are only having a RR of just 1 to 3 by taking aggressive entry. Okay, so this aggressive entry exposes your account to risk than when you take confirmation entry. Though there are times where you wait for confirmation entries on the lower time frame and you get to miss out on trade. There are sometimes some trade will not give you confirmation entry. The trade will just move up. Just like in this buy trade right here, there was no confirmation entry right here, because this was the last high. We expect price to break this high at this level, retrace back down before pushing up. But as you can see, we didn't get that we did not get that confirmation entry at this point. We didn't get the confirmation entry to go long on this trade. Okay, so those are just the cons of waiting for confirmation entry, but overall I would say the confirmation entry is best. Okay, is best to take confirmation entries than to take aggressive entry. Aggressive entries will put your capital at risk, your trading capital at risk more than the confirmation entry. Okay, so guys, that's just the difference between the aggressive entry and confirmation entry. I hope this video was of value to you. I hope you were able to understand the breakdown. If you have any questions, please leave them in the comment section below, and if you can also send me a DM on Telegram at Bimilo as well. If you are yet to join my channel on Telegram, you can do well to join my channel. And if you are interested in trading and training and mentorship with me, it's just $100 for training and mentorship. Okay, so all right guys, I will see you in the next video. Thank you.